Welcome to TheoTrade. This is Don Kaufman. In this video, I'm going to talk a little bit about probabilities in options trading. What you're going to find as we dig into this is that probabilities, they transcend the idea of just options trading, that whether you're going to trade stocks or options or futures or even currency products, the idea of these probabilities, again, can be used throughout any of the different products that you trade. I'm going to kick it off here on the thinkorswim trading application with an example in the trade tab, all products, Apple. Okay, wow, couldn't have picked a better underlying to discuss, Apple. And I've opened up the Jan 2's 2016 that have 22 days remaining to expiration. Now, that's neither here nor there. No matter really what option chains that you open, if the product has weeklies, great. You'll be able to look at probabilities. So what we're going to examine here is kind of a introduction to probability and really understanding, okay, probability of profit, and what kind of probability in the money and probability out of the money, what those represent. So first and foremost, to look at probability, you'd want to change one of your information layouts. So right up top here, on the column, I click where it says open interest. I come down to options, theoreticals, and Greeks, and I look at probability in the money. So if you're sitting there watching this right now and thinking to yourself, well, you know, I don't have the thinkorswim trading application. All right, you could use, rather than probability in the money, you can go to options, theoreticals, and Greeks, and you could use delta. So delta and probability are not one and the same in terms of the calculation, but delta, okay, will suffice quite nicely in lieu of probability in the money calculation. So the probability in the money calculation is based directly from implied volatility of this individual option. The delta over here, okay, again, a very different means to calculate delta. Nevertheless, one of the definitions for delta is that it's loosely associated, okay, with probability of an option being in the money. And again, I use that definition loosely because it's not the marquee definition for delta. But I wanted to like kind of a workaround because for years traders used delta in lieu of probability. In this example, we're actually going to use the probability in the money calculation. So let's get to it. Immediately when you look at this, it says 41%. 41% chance of what? Okay. Now, many of you listening to this have probably traded some options. If you're new to this or have never traded before, fantastic. Okay. All you do is look at the strike price increment. This is the January to 2016 calls. Okay. So everything on this left side of the screen is a call. Everything on the right side of the screen is puts. Predominantly in this example, I'm going to reference calls just to make it a little easier for understanding. Okay, so when people look and they say, well, you know, it's a 40% chance or a 41% chance, we'll round. We'll get crazy in here, right? So it's like a 41% chance. 41% chance of making what? Okay, probability in the money does not denote the probability of you making money. And I want to make that abundantly clear. So if you go out and you buy this option, okay, let's go a little deeper in here. You go out and you actually buy this option right here. And let's just say you pay $2 for it. You don't need, okay, Apple at what? 112. And yet that is what this probability references. Okay, this is a 40% probability, okay, that the 112 calls are quote unquote in the money by 1 penny or more come expiration. Expiration is 22 days from now. So again, I kind of want to enunciate precisely that. There's a 40% chance, okay, that we're going to be above 112, and that's the actual definition is 1 penny or more, so it's 112.01. That doesn't mean if you buy this option that you're going to make money. For you to make money, if you buy the option, you don't need us at 112. You need us at 112 plus the $2.13 plus the transaction cost. So where do you need us? Okay, I'll freeze it again over here. You're going to need us at least at 114. Now, you're going to need us at 114 just to be able to do what? To break even. Okay, you're actually going to need it above 114 to break even because the option's trading for 213. And if you look at the probability of that occurring, you're down to like 29%. So again, it's so critically important to know what we're really looking at. When you are out there and you're trading an option that says 40%, it doesn't mean you have a 40% chance of making money. It only means you have a 40% chance, okay, of this strike even being quote unquote in the money. For you to make money, you're going to need us, okay, up here at the 114 level. That's if you buy this option. Now, let's present it this way, okay? A very, very different means. If someone came up to you and said, hey, go out and buy this option for $2, you go, yeah, that sounds good. Options are really alluring that way. Somebody says, well, you don't have to go out. You don't have to go out and buy $110 stock. Oh, no. Quite contraire. You can go out and you can buy a $2 option. Yeah? Well, that $2 option, if you buy it, you have a 29% probability of getting your money back. Think about that for a second. So let's present it for options for what they really are. You buy a call and somebody says, yeah, you got a 29% chance of getting your money back. You're like, that's not very nice. Who wants a 1 in 3 chance, and not even a 1 in 3 chance of being able to get their money back? Okay? No. Now, can you make a lot of money if you buy this call? Yeah. I mean, you could buy the 112 call and Apple could shoot to 120, and you're like, yeah, beautiful. What's the probability of it getting all to 120? Okay? Just open up more strikes. Actually, you can go in here on thinkorswim. You can type in a number. Type in like 20 strikes. Open up some more strikes. Okay, there's the 120s. Oh, yeah, look. There's a 7% chance of that happening. Ooh, sign me up. I want a 7% chance. This is like akin to going to the lottery. Oh, go to the lottery. It's easier. Okay, because at least to the lottery, you're going to lose. You go out there and you buy these 112 calls and you're thinking 40% chance. So then immediately everybody calculates in their head, where could I buy an option and make some money? So then the next thought you've got, come on, I've been doing this long enough. I know exactly where you're going to look. People go, well, all right, maybe I'll buy these. Maybe I'll buy these guys right up here. Now, why are you going to buy those? Okay, I know why you're going to buy them, because they say 73. I want a higher probability. So now you got a 73% chance. No, it's not a 73% chance of making money. Okay, it's a 73% chance of Apple being above 105 22 days from now. Okay, now, I want to enunciate the 22 days from now because that's a probability of expiring. A lot can happen between now and expiration, but this is a probability of expiring in the money. You don't really have a 73% chance. Okay, so once again, when you think you have a 73% chance, you realize you pay, what, $6.80 for this option, plus the transaction cost, so it's $7. Okay, take 105, because that's what you're buying is the 105 call. It's right to buy the stock at 105, plus, let's call it $7. Why did I round it to $7? $6.80 plus transaction costs, yada, yada, yada. Yada, yada, rotted over the best part. But it's 105 plus about $7. What does it come to? Right in this neighborhood here. What's the probability of that happening? About 40%. So now that you bought an in-the-money option, you paid $7, now you've given yourself about a 40% probability of what? Of getting your money back. For you to make some serious money, I mean, come on, now you're actually risking $7. Now it's starting to get serious. But for you to make some serious money, where do you need us? Well, you're still going to need us back at like 114, and even the risk reward of that doesn't look good. There's only a 30% chance. So what you're learning about probability is what? I don't think I want to buy an option. You're buying an option, whether it's at the money or in the money, and you're looking at these probabilities. And again, it's a really misinterpretation. Okay, because people think they're going to make money just because it says 73%. Again, quite the contrary. You find out that your probability isn't that good. You got to stay tuned to TheoTrade and many more of the videos here, because what I am going to discuss in future videos and future classes is really, number one, how can you buy options and make it effective for you? Number two, how can you do what? Sell options. Because when it comes to probabilities in trading, the sell side of options, it's not necessarily the end-all be-all, but it's a pretty good place to start, because when you buy something with a 33% probability being in the money, selling it then entitles you to a 67 probability that option is going to be out of the money. Stay tuned to all of us here at TheoTrade.